Hi everyone, my name is Mark Quinn. I'm a tax advisor and chartered financial planner with the Specialise group in Portugal. And in this video I'm going to be looking at self-employment and employment tax, the interaction with the non-habitual residence regime, PAYE and more. So I'm getting a lot more inquiries these days in relation to employment tax issues. And I think partly it's a reflection of the younger population coming to Portugal. When I first came to Portugal, I was typically advising people that were retiring here, so they were giving up work. They didn't really have to consider tax issues associated with employment income. But these days, especially post-COVID, we're seeing an increasing number of younger people relocating here that will continue to do some form of work either within Portugal or remotely for overseas employers. And I think it's especially true post-COVID because employers are a lot more receptive to people working remotely. So what are the key issues that we need to be thinking about when we're looking at employment and self-employment tax? Well, there's two key issues. The first one is the distinction between income tax and social security contributions, because like we do in the UK, we have an income tax liability, but we also have to pay national insurance. And the same concept applies when you're in Portugal. Not only do you have your income tax issues to look at, you also have social security contributions. The other key dimension is the non-habitual residence regime. Now, I've covered this in more detail in another video, but in short, it's a 10-year tax incentivised scheme for new residents of the country. And I'm assuming that if you're watching this video and trying to understand tax issues, you're probably new to the country and therefore you will be applying for non-habitual residence. Now, as I've stated in a previous video also, in 99% of cases, it's always better to apply for non-habitual residence rather than not, but there are nuances to it, so always take advice in respect of your individual and personalised situation. So let's first look at the income tax treatment of employment and self-employment income here in Portugal. It's actually neutral from a tax point of view between self-employment and employment income. You're going to be paying the same tax rates. But there's some common misconceptions that we need to wade through. The first one is that people coming here and living here and working from Portugal think that if their employer is, say, in the UK or the US, they have no income tax liability here because they're receiving money from an overseas employer. That's not true. The principle of tax residency, and you will be a tax resident if you're living here permanently, is that you pay tax on your worldwide income and gains. It doesn't matter where they're coming from. The other misconception, and this is intensified because of the non-habitual residence regime, is that the non-habitual residence regime says that if the income is coming from a foreign source, that it's tax-free here in Portugal. And this creates further confusion because if you're working for a UK or US or another non-Portuguese company, the logical conclusion is that you don't have to pay tax. That's not actually true. The actual position with employment and self-employment income is that you pay tax in the jurisdiction in which you perform your work. So if you're a Portuguese tax resident, you're working remotely for an overseas employer, but you're performing the work exclusively in Portugal, you pay income tax in Portugal. And so even if in this scenario you're receiving money from an overseas employer, you still have to pay tax on that income in Portugal, because what matters is where you are physically based, not where the employer or the source of the funds are. So when you look at different internet sites, you may see some sites saying employment income tax is tax-free in Portugal, and you'll also see some sites saying it's actually taxable. And both are right, because it ultimately depends on the double taxation treaty between where you're being paid from and Portugal. So if the treaty says that the income is taxable from where you're receiving the funds, then it satisfies the condition in Portugal for it to be tax-free. However, most taxation treaties don't work like that, and what they say is they give the taxing right on employment and self-employment income to Portugal, and therefore it doesn't meet the condition under NHR for it to be tax-free. I know this might sound confusing, but you can always drop me a line and explain your specific situation that can guide you as to how your employment and self-employment would be treated here in Portugal. Continuing with income tax, but moving on to looking at self-employed income, even though you pay the same tax levels, the way you actually report your income does differ under the self-employed route. And that's because you have two different bases of reporting your income here in Portugal. And there's one called the accounting basis of returns. And in this way, it works in a similar way to what you will have experienced in the UK. You have a gross profit as a self-employed individual. You have expenses to deduct off that gross profit, and you pay tax on the net amount after deducting your annual expenses. The other route is the simplified reporting route. And in that way, you're not declaring gross profit less expenses. What you're doing is you're just declaring a simple percentage of your annual income. So the default position for self-employed people is that 25% of your income is deemed to be expenses. So if you have income of €100,000, you're actually declaring €75,000 because 25% is deemed as expenses. Now this simplified reporting option is only available if your income is less than 200,000 a year. Also, an unusual quirk of this reporting methodology is that you declare a percentage based on your occupation classification. So for example, if you're deemed to be in a purely sales role, you declare 15% of your income. Now moving on to talking about what rates of tax you'll pay. The default position for Portuguese taxpayers is that you pay tax at progressive rates. So these start at 14% if you're earning up to €7,000, and then they gradually increase in a similar way to the UK does. However, there are more banding levels in the Portuguese tax system. I have put these detailed below in the description. But the highest rate is 48%, and that kicks in just above €75,000. So it's quite a high rate kicking in at a relatively low level. If you consider the UK system, you have to be earning over £150,000 to be paying tax at 45%. Another rate that applies is a 20% flat rate of tax, and that applies if you're coming in under the non-habitual residence programme and you qualify as what's called a high valued activity. Now I've put a list in the description below of what these high valued activities are, but as an example, we're looking at architects, engineers, IT workers, senior managers, directors, etc. So moving on to social security contributions now, the general rule is that you pay social security contributions in the country you're performing the work. So if you're coming here to Portugal, you're living and working here, you pay social security contributions here. If you're employed, your employer also has a liability to pay social security contributions on your behalf. Now there is an important exception to the general rule that you pay social security contributions here in Portugal, and that's if you can continue to pay them in another EU state, because if you can, you satisfy the Portuguese social security contribution obligations, but this can only last for a period of 2 years. Also importantly, if you're coming from the UK, even though the UK now is out of the EU, you can still continue to use that exception under the A1 form. Now there is another track you can go down besides the employment and self-employment routes, and that's by forming a company or by using a company that you already have in existence. Now the beauty of that approach is that if you're taking dividends from a company, dividends here under the NHR regime may be tax-free. The other benefit of doing that is that if you're paying yourself via a dividend, the dividend is not subject to a social security contribution, so you don't have any liability here in Portugal. You do continue to pay the corporation tax in the country that the company is formed. So if it's a UK company, you're going to be paying corporation tax at a starting rate of 19%. But as I say, any dividends extracted after that is tax-free in the hands of a Portuguese tax resident under the non-habitual residence programme. Just a few warnings on the company issue. You need to avoid blacklisted jurisdictions because they're taxed more punitively than whitelisted jurisdictions from a Portuguese tax point of view. And also you need to be careful about where the management and control of the company is done from. So for example, if you're a sole shareholder and director of a company, say a UK company, but you're now living and working in Portugal, even though the UK company retains its legal status as a UK limited company, from a tax point of view, it could actually be deemed to be a Portuguese company, because the principle of corporation tax is that it's a tax resident in the country in which it's controlled from. So if you're controlling a company solely from Portugal, it could be deemed to be a Portuguese company, and therefore the dividends wouldn't be tax-free. So I hope you found this video useful. I know it's quite a grey area, and it can be a particularly complicated area of tax planning, but I'm always available to have a chat, free Zoom or initial call with you to explore your individual situation and how you'd be treated here in Portugal. And I look forward to hearing from you soon. Thank you.